Hi, it's Gail with Traders Help Desk. I wanted to show you why I trade gold and crude and the DAX on the binaries. This screen shows all of the instruments that I trade on a daily basis, and it also tells me the average daily range as well as a long-term range. In this example, I have it set to a 10-day average. So you can see that crude moves 1.4 points per day. That's 140 ticks. Gold moves 12 points. So that's basically 122 ticks. And the DAX moves 120 points as well. That comes out to about 240 ticks a day. Now, when I trade futures, I take 10% of the long-term range as a profit target for scalping purposes. So on crude, I know that my profit target would be $140. On gold, it would be 120, and on the DAX, it would be 300. Now, I divide that by 2, and that would give me my stop. As you can see, on crude, it would be 7 ticks. On gold, it would be 6. And on the DAX, that would actually be 6 points, which is 12 ticks. The problem is, on the future side, if you tried to use a 6-tick stop on gold, you would get stopped out a lot. And the reason is gold is one of the most volatile markets. And this is why new traders have trouble trading gold or trading crude. Either one, they are the same. They're both very volatile markets. So if you come over to the charts, you can see that we're definitely in a downtrend this morning. We've made a magenta peak. We've retraced back to the ATR, but I expect gold to continue down. You can also see over here on the what I call the meter window that the dollar is heading up and that both gold and silver are coming down, as well as crude. This is typically when you get a better movement in gold, is when the dollar is going against gold and silver directions. You can also see on the 45-minute, you don't have any support for price until it gets to 1252. And then if it goes through 1252, your next area that may support price is about 1248. Now, if you were to go into the future side of this market, then again, your only recommendation would be to use a 6-tick stop. With slippage, that's actually going to be very hard to do. Now, for those of you that don't know what slippage is, it means on entry, you may not get the price that you want. It moves against you 1 or 2 ticks by the time you enter. So, another alternative for this would be to use the binary spreads. And this morning, it was kind of unusual because we had 3 spreads that we could actually go in. We had a ceiling at 1300, a ceiling at 1250, and a ceiling at 1275. Now you could have gone in each one of these. I am showing a simulator, not a live account. You have 10 positions and you entered at 1248. You have 5 positions at 1253.9. And then you have another 5 positions at 1253.3. So that's actually 3 different trade positions, and each one of them was based on the same setup, in that gold is expected to go down. Okay, this is the same gold trade. Remember, we did 3 spreads with anticipation that if it breaks this line, it would come down to this line. Now I want to bring over the simulator and show you what it's doing. Each one of them are in profits, and this is where Nadex has the advantage over the futures. While we are in profits on Nadex, we've never been above $100 loss on any of these positions, and this is a total of 20 contracts. Now let's go and look if we've been trading the future side of it. The 3 minute actually shows it the best because you can see this is where we started watching the market and it went into a congestion range. This congestion range is really what causes the losses on the future side. Yet on the Nadex side, we are actually able to stay with the trade and let the trade work in our favor. That is spectacular.